Where should you invest in 2025? Not in stocks, not in crypto, not in starting a business from scratch. Invest in real estate because it kicks butt compared to all of the others, and in this video, I'll show you why. There are two silent killers of building your wealth. The first one is taxes, and the second one is inflation. So let's go over on the whiteboard how much you actually are losing to taxes and inflation. All right, let's go through exactly how much you're losing in taxes and inflation. Let's say you're making about $100,000 a year. You're going to be paying about 22% taxes for federal. And let's say we have state taxes. On average, state taxes is about 5%. Then we have your Social Security and Medicare taxes. So that's about 7.65%. Finally, let's say we add up those three, the federal tax plus the state tax plus the Social Security and Medicare taxes. Overall, that's about 35% you have to pay in taxes already. That basically means you make 65 cents on every dollar you make as an employee. Next, let's move on to inflation, which is about 3% per year. Now, some years it might be a little bit more, some years a little bit less, but overall about 3%. So after that additional 3% for inflation, you're only making 62 cents for every dollar that you earn. And then finally, we have sales tax. So every time you spend money, you have to pay sales tax. And the average sales tax is about 7%. So adding all this up, and the sales tax, inflation, federal tax, state tax, Medicare, Social Security, all this stuff that you have to pay, you only end up with 58 cents for every single dollar that you earn as an employee. That's about half your money you're losing without even realizing it. So that's the bad news. Hopefully that wasn't too depressing for you. I know it was definitely depressing for me when I first saw that and added it all up. But the good news is that real estate investing actually flips the script. Inflation actually works in your favor. Taxes as well work in your favor, and you can take a lot of tax benefits and tax deductions as a real estate investor. So let's go over inflation first. As inflation goes up, rents and your home values actually follow inflation. They keep up with inflation is what economists will tell you. So what they mean by that is as inflation goes up, rents go up, which means your rental income will go up, and home prices go up as well, which is called appreciation. So rental income goes up, you make money through appreciation as inflation works in your favor. And then we go to the taxes part of it. What's cool is you can take all these tax deductions, your mortgage interest, your repair costs, your renovation costs, and instead of those becoming straight up expenses for you, those are now tax deductions, tax write-offs for you. And there's this thing called depreciation, which is also known as a phantom deduction because it's a money that you can deduct from your income without actually losing that money. Basically, the IRS considers every property to have wear and tear and lose money in value, which property actually goes up in value. It doesn't lose money in value, but you're still able to deduct that loss from your income without actually incurring that loss. So depreciation is a massive tax benefit that you get to take as a real estate investor. In fact, there are real estate investors who basically pay zero income tax because they can take all these deductions and depreciation. Now, there's even W-2 workers who can, if you follow the tax code and you do it right, you can deduct the expenses on the real estate from your W-2 income. And so there are some multiple six-figure earners, pharmacists, doctors, dentists who actually pay zero income tax because they invested in real estate. And that's when you get into the real estate professional status, Airbnb loophole, etc. But we can go ahead and cover that in future videos. Now, real estate has two key elements to consistently build your wealth. That first key element is control. Imagine investing in a stock, for instance. When you invest in a stock, you have no control over if the stock goes up, if it goes down, if it goes sideways. The company's decisions affect that, as well as geopolitical factors. So essentially, when you're investing in stocks, you're putting your money in an area where you have no control over. Versus real estate, you put a 20% down on the property, but you have 100% control over what you want to do with that property. Maybe you want to buy properties in poor condition, fix them up, flip them, add those lovely renovations and make it look really nice, and then you flip it and make a lot of money from that. Or maybe you buy a property that's already in great condition and then you rent it out by the bedroom to college students, which is what I do. You get to decide what you want to do with your rentals and your properties, and nobody else gets to decide that but you. So basically, you're in charge of your own success, which is what I really love about real estate investing. Now, the second thing that we want to talk about, the second key element that builds your wealth in real estate is called leverage. And leverage is essentially putting in a little bit of something to get a lot more of something. So putting in $5 into real estate and it comes out to be $20 down the line. And I'll show you exactly what I mean through something called appreciation, which is the increase in home value over time. I'll go ahead and show you on the whiteboard how appreciation actually multiplies your return on investment. Okay, let's take an example where we're buying a property that's $100,000. I'm just using these numbers to keep it simple. Obviously, there's not too many houses out there that are $100,000. But let's go ahead and assume we put a 20% down payment on this $100,000 property. So that would be $20,000. Now, on average, appreciation across the United States is about 3% per year, meaning home prices go up about 3% per year on average. So 3% of the $100,000 is $3,000. Now, when you look at these numbers more closely, something magical happens. Take your appreciation of $3,000 a year and divide that by the down payment you put of $20,000. So $3K divided by $20K. Instead of getting a 3% return, you're actually getting a 15% return on your investment. Now, why is that? Because of leverage. You're only putting a 20% down, which is a 1-to-5 ratio. So instead of your appreciation being 3% return, you multiply that 3% by 5 because it's a 1-to-5 ratio. And that gives you an overall 15% return on your investment. And that's why real estate is so powerful. The stock market in general makes 7 to 10%, maybe on a good year, 12% on average per year. Versus real estate investing, at a minimum, it makes 15% return. And we're not taking into account cash flow, loan pay down, tax benefits, and all that jazz. So you can see very quickly how real estate completely knocks the park out of the stock market, especially if you're in it for 5, 8, or 10 years. Okay, now there's one more key component that we need to talk about for real estate investing that makes it so powerful. And even though appreciation increases your wealth and value over time, it doesn't put money in your pocket every single month. What puts money in your pocket every single month is cash flow. Basically, your rental income minus your mortgage payment minus your expenses, whatever is left over gets put in your pocket every single month as income. That's how people can eventually retire and reach financial freedom by investing in real estate. Now, nowadays, with the high home prices and high inflation that's going on, it's very hard to make cash flow by renting out a single family home to a family. Instead, what I do is a very unique strategy. By renting out each bedroom to college students, I'm able to make a lot more income on a house. So for example, let's say we get a property to 6 bedrooms and we rent out each bedroom for $600 to $700 per month. That means that property will produce $3,600 to $4,200 per month in rental income. And when you subtract out your mortgage payment and your expenses, that still leaves you with $1,500 to $2,500 per month in net cash flow on every single property. And that's how I was able to scale so quickly, as I rented out by the bedroom to college town students and to medical professionals like healthcare workers. And by doing so, I was able to hit financial freedom at the relatively early age of 31 and retire from my full-time pharmacist job at the age of 31. Now, given all that we talked about, the amount of money you're losing in taxes and inflation, and how the system kind of takes advantage of the middle class, you have to realize something. The biggest risk that you would be taking is if you did nothing. By relying on one single income source, which is your job, in an AI disrupted economy, it's very risky actually. Most people, they go on autopilot and they work day after day after day until it's too late. And 40 years later, you wake up, you have a medical emergency and you have to support your family member, and then you realize that your 401k is not going to cut it. And so a lot of people live their life in regrets by never taking that very first step into real estate investing and wealth building. Ask yourself, what if you wake up one day and AI took your job? What if you were just let go all of a sudden? Would you be okay with that? Real estate gave me freedom, flexibility, a lot more choices and options in life. And if you have kids, thanks to a step-up basis, you can pass on your real estate assets, your income-producing assets, to your kids without them having to pay a significant capital gains tax, depending on how much property that you own. So it truly is one of the best ways to create that generational wealth. So some final takeaways for this video. You really don't have to have everything figured out to just get started and buy that first property. And you'll find that real estate builds up momentum pretty quickly if you do it right. For example, using the student housing strategy, rent by the room, it can really build up cash flow, and every single house you buy increases your income so you can buy the next one faster, and eventually that, for me at least, snowballed. Versus the other industries out there like Airbnb, for example, are suffering from too much competition, too much regulations going on, and it's just not worth it anymore to do traditional real estate investing or Airbnb investing. So I hope this video was helpful for you guys. We went over a lot today, and if you enjoyed it, please don't forget to like and subscribe and share it with your friends and those who are really struggling with getting started in real estate investing. Thanks again for watching, and I'll see you on next week's video.